Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest. And today's video is all about SoFi stock. And SoFi is finally having a green day so far. You know, always nice to see because over the past 5 days, we're down 6.32%. But the thing is, SoFi is just following the NASDAQ. Fundamentals have not changed. I hope we're all still holding. Not that that's financial advice. And we will be back again in the green more consistently once all the tech sectors recalibrates. You know, we know SoFi is a very strong company with great leadership. Institutions have held and they have not decreased positions in these last rocky 3 months. You know, through all of this, no one has dropped any share blocks. So, you know, one would think that everyone is waiting on charter news during another quarter of volatility. So there's absolutely no point in dumping now if you are a long-term holder. And when we talk about price action, I mean, since SoFi has been a public company, it has gone up and down in these very clear waves. If you look at the max chart, every single time it has bottomed in the $13 to $14 range. It has then every single time gone back up over $20, usually to $24. And now in the meantime, SoFi has been growing its accounts, growing its revenues, growing its margins. And it has been exceeding its own previous bullish expectations and raising its guidance every single quarter. On top of that, this doesn't even include its student loan business, which has been on pause and will start up again in May. It also does not include the upcoming bank charter, which will drastically improve margins and allow a whole new business of deposits. It really will be a whole new world for SoFi. It'll also make SoFi an official bank. You know, so it'll no longer technically be in the fintech space. It will be a fast-growing, profitable bank. And if rates rise, SoFi will benefit from that. So, you know, just look at banking stocks lately. They are having a nice time because at the end of the day, when rates rise, their spreads improve. You know, why do you think shorts are so desperate right now? Constantly spamming all the you know, the Yahoo and the StockWits boards because they know this is their last chance to get the last few scaredy cats, shall we say, to sell. They know they're sitting on the strongest support level, and history shows this has always been the golden buy zone. You know, this is a major company with buy ratings from all the analysts across the board, run by the most respected CEO, Anthony Noto, with multiple near-term upside catalysts sitting right at its historical buy zone. Doesn't get much better than that. As you know, and in case you don't know, my price target for SoFi in 2022 is $30, and I think that's an easy $30, to be honest. You know, the tech sell-off in 2021 was definitely gut-wrenching and a very volatile time. You know, volatility is ultimately the price we pay for outsized returns, and that's, you know, definitely even more so true with young growth stocks. But you gotta bear in mind that SoFi has growth optionality. You know, SoFi started its growth story as solely a student loan refinancing platform. You know, that was its only shtick. And then SoFi quickly multiplied its growth avenues, creating 3 distinct business segments. You know, the lending, the technology platform, Galileo, which is absolutely huge, and maybe we don't talk about it enough on this channel, but it's an application programming interface, API, and payment platform for fintech. And then we've got the financial services, SoFi Invest, Money, Credit Card, Lantern, Protect, and more. Galileo, for example, saw sales rise 80% year over year in the third quarter, and it looks beautifully positioned to benefit from the ongoing movement toward fintech. Galileo helps enable many of today's up-and-coming fintechs to operate effectively through its payment platform and API, making its long-term potential to SoFi absolutely massive. Another reason to be very bullish on SoFi stock in 2022 and beyond is that SoFi has sustained high growth. Not only does SoFi offer investors multiple young lines of businesses to generate new revenue growth with, it is also seeing high overall growth rates despite the, you know, student loan thing. The year-over-year change for members was 96%. For lending products, 15%. For financial services products, a whopping 179%. And the Galileo accounts, 80%, as I said. As well as this, SoFi's EBITDA, adjusted earnings before interest, taxation, depreciation, and amortization, has been positive for the past 5 quarters, and it has improved for the previous 4 years. And yes, okay, while adjusted EBITDA is not the most trustworthy of profitability metrics to use, a lot of people look down on it. In SoFi's case, it does show consistent and steady improvement. So I think in this case, it is a pretty telling metric. And lastly, SoFi has a recently discounted valuation, and that's what makes it super appealing right now. Thanks to this broad tech growth stock sell-off in 2021. After dropping by more than 40% from its 52-week highs, the stock currently trades at approximately 13 times sales. If you compare that to their peers like PayPal or Block, with their price to sales ratios of 9 and 6 respectively, SoFi sales seem reasonably priced, especially considering its incredible growth rates that I've been discussing in this video. Furthermore, SoFi's market capitalization, or company price tag of $12 billion, is just a fraction of its much larger peers. So it really is an absolute steal right now, to be honest. So guys, that's all for today. Let me know your thoughts in the comments below. Thank you so much for listening. Until next time, have a great day.